Okay, my dear students, today we are starting a very special class of tax planning. This is Mustafa Mirchawala, your F6 trainer. Uh, I have already taught you few questions of tax planning like Carol Courier, Ali Patel before, but this class is purely designated to tax planning. Okay, and the question which I'm going to teach you today, it comes in last 40 marks section C of your F6 exam, and there is a designated 10 marks normally for that tax planning question. And this area is about real tax, the implications of tax. Normally the tax is all about learning rules, but this in this topic you will apply rules, you will do planning, and this is the area. If you are expert at this area, then your client will give you good cash, then you can earn good, because you will help your client savings tax, you will help your client in tax planning, in avoiding tax. Okay, so if you help client making money, your client in return will give you cash. Okay, so this is the topic of earning basically. Now, just for your motivation, our world top students, 2 consecutive world top came. Then now let's start. First of all, if an individual wants to business, the first method of business to do as a sole trader, individual owner, direct human being owner, right? So this is basically called sole trader or self-employed. Now if you are a self-employed businessman, then you already know this. Your income will be treated as trading income. Your income will be treated as trading income, and on that trading income you need to pay tax, you need to pay income tax, because that trading income will be your non-saving income. That trading income will be your non-saving income, and you need to pay income tax on it, you need to pay income tax on it. Okay, and also one more thing, as an individual, as you are human being individual businessman, then you need to pay class 4 and IC as well. Okay, so I repeat, the first form of business through which you can conduct your business is a sole trader. And if you are working as a sole trader, then your then your business income will call trading income, and on that trading income you need to pay maximum two things: number one, income tax, and number two, class 4 and IC. Okay, now the second form of business. Now somebody guided you to form a limited company, and if you form a limited company, now you are the 100% owner. So now the owners of limited companies are called shareholders. So you will be the 100% shareholder of your new limited company, the new business which you form. And also you can be a director, of that limited company, also you can be the director of that limited company. Okay, right? But do remember that director is employee of the company. Director is basically employee of that company, don't forget this. Okay, now if you form a limited company, what will be the implication? The first few basics, few differences. Listen, setting up a company and run business with company name. Now with company corporation tax, whenever you form a company, now all earnings will reflect with the name of company. So company has to pay corporation tax, you know the rates 19 and 25%, we have already covered it. Okay, but if you would have worked as an individual, sole trader, self-employed, then for individuals the tax rate of non-saving is 20, 40 and 45, basic rate, higher rate and additional rate, you know that. Okay, and also if you run a business as a company, you know company never gets old. Company is not a human being, company is not a natural person, company is an artificial person, so company won't get old. So company never needs any help from government, right, in terms of old age benefits and all. So company does not need to pay class 4 and IC. I am sure I have taught you this in the NIC chapter. So if you work as an individual, then you have to pay class 4 and IC. But if you run your business in the form of limited company, no need to pay any class 4 and IC. And please listen each and every line very carefully, because it is going to help you in the questions. Okay, now once you form the company, now the next step, How will you take out funds? How will you extract funds from that company? 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 This is the next challenge. This is the next challenge. How will you extract funds from that company? Okay. So the first form is, you can be a director of that company. You can be a director of that company, and director is basically employee. So you can withdraw salary from the company. You can withdraw salary from the company. Now use your brain. When you will become the director and employee of the company, that means the company is the employer. Company is the employer. So first let's discuss with the company point of view. Whatever salary company is giving to you, it's an allowed expense for the company. Allowed expense for the company from trading profits. Number two, when you are the employee of the company, now company has to pay class 1 employer NIC for you. Company has to pay class 1 employer NIC for you, and which is also an allowed expense for company. Now come towards the individual. Now you are the director, human being director, individual director. So whatever salary you are receiving, it's your employment income, and you will have to pay income tax on employment income. Number one. Number two, now as you are an employee, and you are receiving salary, so you must have to bear the burden of class 1 employee NIC. Okay, so total four things. As a company, corporation tax, yes. As a company, class 1 employer NIC, because employer. As an employee, director is an employee, is class 1 employee NIC. And finally the income tax. In reality, these four things to be borne by you, because this is your company. You just change the form of business. You just change the form of business just to save tax, but in reality everything is one unit. Everything is one unit. Let me discuss. Okay, so whatever I just taught you orally, now it is in the written form. How to extract profits from company. Number one, first method, be a director of company and withdraw amounts in the form of salary. Withdraw amounts in the form of salary. Okay, now this salary is an allowed expense for company. Now company has to pay class 1 employer NIC for you. See the screen. You as a director and employee, that's why your income. Now whatever income you are receiving, from the company, see, company is the employer, so that will be your employment income, and on that employment income we need to pay income tax as a non-saving income. Now you have to pay income tax on employment income plus class 1 employee NIC. Now one more thing, as we are the employee, the director is the employee of the company, so company is the employer. So in the employment relationship, company must deduct pay. Company must pay to government on your behalf. Company must pay to government on your behalf, right? Please check it out. Now the next form, how to withdraw funds, is the second method, is dividends. As we are the shareholder, see, we are the 100%, I'm the 100% shareholder of this company. I am the 100% shareholder of this company. I'm the 100% shareholder of the company. So now as a shareholder, I can withdraw ordinary dividends. Shareholder gets ordinary dividends, right? So what will happen? See, very simple. Be a shareholder of the company and withdraw dividends. Now, these ordinary dividends are not an allowed expense from company. You know that. Whatever dividends, ordinary dividends company paying to shareholders, ordinary dividends are never an allowed expense from trading income P&L of company. It's not an allowed expense, okay? It's not an allowed expense at all, okay? but company don't need to pay. Now when when the company is giving dividends, so dividend does not mean employment income. Dividend does not means any employment income relationship. So no NIC in this topic. No NIC in this topic. Neither class 1 employer NIC nor class 1 employee NIC. Nothing. No NICs at all. Now, as an individual, when you are receiving dividends, as an individual shareholder, when you are receiving dividend income, yes, dividend income is taxable, and dividend income is taxed on receipt basis, yes, and the tax rate is, see the screen, 8.75 for individuals, 33.75 and 39.35. You as an individual no need to pay any class 1 employee NIC. So this will be the implication. See students, if you withdraw funds as a shareholders in the form of dividends, if you withdraw funds as a shareholder in the form of dividends, okay. So my respected students, we are starting question number 1. Be active. This is all about, this is the basically revision of whole text syllabus, right? So you must know each and every small things, and you need to listen very attentively, right? Okay, so you should assume that today's date is 15th of March 2025. 15th of March 2025. You are a trainee chartered certified accountant dealing with the tax affairs of Gamila, okay? Who is the managing director and currently 100% shareholder in Alimag, okay? So it's a family owned business. Alimag Limited is the name of company. This lady Gamila is the 100% shareholder plus the director, okay? So both things are there. Now, for the year ended 5th April 2025, Alimag Limited taxable total profit before important wordings. That means no salary is deducted from this, salary or anything is deducted from this. Before taking account of directors' remuneration are forecast to be 180,000, 180,000. Now, Gamila originally, see, this is the original basis of profit extraction, and this is already solved. The first part is already solved in the question. The first part is already solved in the question, okay? Gamila originally intended to withdraw 125,000 of the profits as director remuneration, and you have calculated that this approach would result in the following tax liabilities and NICs, okay? So if this lady withdraws 125,000 as a director remuneration, then what will happen? Listen, in terms of Alimag Limited, this will be the corporation tax. This will be the corporation tax. Obviously, when the company is paying salary to Gamila, that means company is the employer. Company is the employer. So company has to bear this burden of class 1 employer NIC. Now come to Gamila. Gamila is receiving salary. That means Gamila's is receiving employment income. So on employment income, she has to pay income tax. And as an employee, she has to bear the burden of class 1 employee NIC. Now total 4 things. And if you take sum of these four, you will get this answer 72422. So the existing total cost to Gamila is 72422. Existing total cost to Gamila is 72422. Okay, now this is the new revised basis of profit extraction. Now this part we have to solve. This part we have to solve. Listen, what they are saying. After a meeting with Gamila, a more beneficial approach to withdrawing 125,000 of the profits from Alimag Limited has been agreed for the tax year 24-25. Now the same amount will be extracted, but in a different way. See, Gamila will withdraw gross director remuneration of 25,000. Now the salary she will receive, Gamila, is now 25,000 only. Now Gamila's husband Magnus will become a 25% shareholders in Alimag. Now 25% shareholding will be transferred to Magnus, the husband. Now Alimag Limited will then pay a dividends of 75,000 to Gamila and 25,000 to Magnus. Okay, neither Gamila nor Magnus will have any other income in the tax year 24-25. Now one new person came in, the Magnus. So we have to calculate taxes for Magnus as well, and we need to recalculate tax for Gamila as well, because now listen, now Gamila is receiving this much salary, see, 25,000 salary and 75,000 dividends. Okay, so new taxes we need to calculate. Requirement: calculate the overall saving of taxes and NICs for the tax year 24-25 if the revised basis of profit extraction is used instead of original basis of profit extraction. Okay, let's start. Not difficult, just concentrate and please see the screen very carefully. See, this is for Gamila. Right now we are calculating for Gamila. Okay, so Gamila has got an salary. Salary means employment income of 25,000. Please be active. And she has a dividend income of 75. So you will make two columns, non-saving and dividend, and you will make it total. Now listen, your total income is 25 plus 75 is 100,000. Total income is 100,000. Same is the case. Net income is also 100,000 plus your ANI. The ANI, adjusted net income, is also 100,000. And whenever your ANI is exactly 100,000 or less, 100,000 less, you get a personal allowance of 12570. So you will have a taxable income of 12430. You will have a taxable income of 12430 of non-saving and 75,000 of dividends. Okay, now simply let's calculate tax. Now how you will calculate tax? First of all we'll calculate tax on non-saving. So I'll pick the non-saving income and I'll knock the first band. of 37,700. So this 12430, this 12430 will easily come in the first band, and the first band tax rate for non-saving is 20%. So this will be 2486. This will be 2486. Okay, now out of 37,700 we have calculated tax on 12430. So how much is left? It is left 25270. This is the unused capacity left of first band. Now my dear respected students, we'll come to the second band. We'll be coming to the second band. Okay, sorry, we'll coming to the dividend income. We'll be coming to the dividend income. Now whenever in your life you calculate tax on dividend income, what you do? First NRB, then normal tax. And dividend income in NRB is fixed, which is 500, irrespective of your tax status. Okay, now NRB also consumes your band, that. Okay, out of 75,000 we have calculated tax on 500, so 74,500 is left. Now tell me, you'll pick this 74,500 and you'll knock this first band. So remaining capacity is 24,770, which is less than the income. So definitely we'll use complete remaining capacity. So it will be 24,770 into 8.75%. Okay, so this will be 2167. Then out of 74,500 We have calculated more tax on 24770. So now how much dividend income is left? 49730. 49730 dividend income is left. So definitely this 49730 will come in the second band, because the first band is totally consumed now. This first band is totally finished. So 49730 will come in the second band, sorry. 33.75%. Okay, now please calculate the income tax liability. It will be add all four. It will be 19041. It will be 19041. So my respected students, I have just calculated income tax for Gamila using the revised basis. Okay. Now, definitely when Gamila is receiving salary, so she's an employee, so she has to calculate class 1 employee NIC. She has to calculate class 1 employee NIC. Now wait, let me show you the rates. See, these are the rates. See, these are the rates of class 1 employee NIC. Please check it out. Class 1 employee NIC 0 to 12570 is 0%. Then second band 12571 to 50270. 50270, it's going to be 8% and then 2%. Okay, can you see the screen? Now let me go back. Now this time your salary, wait, class 1 employees NIC is calculated on cash salary, cash bonus and driving payments received over 45 pence per mile. So no driving payments in this question, no bonus, only salary. And salary is how much? Salary is only 25,000. So let's calculate class 1 employee NIC. And now be smart, you have done it many times you have done. So listen, we'll pick 25,000 and we'll knock the first band. So complete 12570. The first band is 12570 will be consumed and it's 0%. So I'm not writing it. Okay. So now after 1250, the second band, the remaining income, the remaining salary will fall in the second band. How? 25,000 minus 12570, and you know the tax rate for the second band is 8%. So it will be 994. See, this is your class 1 employee NIC. This will be your class 1 employee NIC. Oh, sorry, I have calculated on the wrong heading. I'm sorry. Here. Class 1 employee NIC is here. Okay, sorry. Now one more thing. Now when Gamila is employee, that means Alimag Ltd is employer. Alimag Ltd is employer, so employer has to bear the burden of class 1 employer NIC. Class 1 employer NIC, which is easier, very easy. Class 1 employer NIC, the rates are 0 to 9100, it's 0%, and then flat above 9100 there is a flat tax rate of 13.8%. So it will be 25,000 is the salary minus 9100 into 13.8%. Okay, so this will be 2194. 2194.2. 2194.2, or you can just write 2194. Round it off. Okay, now 3 things we have calculated. Now the last thing and the most important is corporation tax. We need to calculate corporation tax. Listen, student. Now this time Gamila is employee, so Alimag Ltd is employer. So we have done this in trading income. Whatever salary employer is giving to employee, it's an allowed expense. It's an allowed expense from trading income P&L of employer. Okay, so the trading profit in this question was 180,000 and it was clearly written. If you want to see it again, let me show you. It was clearly written before. See, before taking account of director remuneration. See this. So we need to deduct it. How? See, trading profit is 180,000 less salary, now it's 25,000, and also you know that class 1 employer NIC is also an allowed expense, from trading income P&L of employer. So class 1 employer NIC is 2194. Yes, I've just calculated. Now you tell me your TTP will be final profits for corporation tax is 152,806. Now you need to calculate corporation tax, and I have taught you in extreme detail corporation tax. You guys are master, so you know the rules that as this TTP is more than 50,000, so you will apply the rate of 25% and then you will go for marginal relief thing. Remember? Okay, but I'm using a shortcut. You do with the long cut. You do with the normal rules which I taught you. But remember, when I was teaching you corporation tax, I taught you some bands as well, some shortcut bands to calculate corporation tax without marginal relief, and I'm going to apply that as right now. So what was that shortcut? Listen, it was out of this 152,806, the first 50,000 you will apply 19%, and the excess over 50,000 is 102,806, apply 26.5%. remember this thing, I taught you this. Or if you forget this, just go calculate it in the normal way, you will get the same answer what I am getting. Don't worry about it. So this will be 9,500 here and 27244. Okay, so your corporation tax is 36744. Okay, this is your, you can try corporation tax through the original method as well, same answer you will get. Okay, now I have calculated all taxes NICs for Gamila company and the trading profit as well. Now as a student you may ask, sir, company also gave dividends to both Gamila and Magnus. This new company also gave ordinary dividends to Gamila and Magnus. Why didn't you treat the ordinary dividends as an allowed expense? They are never allowed. They are going to the owner's home. That's why ordinary dividends are not allowed expense at all. Ordinary dividends are not an allowed expense at all. Okay, so my dear student, now last thing, the husband Magnus also received dividends of 25,000. The husband Magnus also received a dividend of 25,000. Okay, so dividend received is no other income. Magnus does not have any other income, so dividend will be the only income. You will write in the dividend column for Magnus. There is no other income, so it will be total income, and it is the ANI also. And when your ANI is just 25,000, that means less than 100,000, your personal allowance will be 12570. So can you tell me what is going to be your taxable income? 12430. And now as your taxable income is less than 37,700, so it will all come in the first band. How? For dividend, always first NRB, which is 500 multiplied by 0% is 0. And out of 12430, you have calculated tax on 500, so the remaining amount will be 11930. So 11930 will also come in the first band, and the first band tax rate is 8.75%. 1044. Okay, I'm rounding it off. So this is the tax for Magnus. This is the tax for Magnus. Now, as a student, you may ask, sir, any NICs on Magnus? No, because with dividend income, with dividend income, no NICs implications. With dividend income, no NICs implication. With dividend income, no NICs implication. Okay, now finally let's highlight the taxes. Listen, I'm first thing, this whole setup is one family. Okay, one family, they all are doing this for the tax saving. Okay, but all taxes to be borne by the same family. Okay, so how many taxes now in this case? The first thing is this income tax by Gamila. This is the first tax. Then the second is class 1 employee NIC by Gamila. Then class 1 employer NIC by the company. Yes, company is also owned by Gamila. Then 36744 corporation tax by Gamila. Definitely they are one unit. And finally this income tax liability by Magnus. Definitely it's also part of family. So total 5. I have highlighted 5 items. I have highlighted 5 items, dear students. So these are the new taxes. So now let's compare it. Now let's compare with the existing package. The existing package was 72422. Remember 72422. Let me show you as well. The existing package was this 72. See this 72422. Can you see? Now the revise will be Gamila's income tax is 19041. Class 1 employee NIC is 994. Class 1 employer NIC is 2194. Magnus income tax is 1044. And the corporation tax is 36744. So if you add all these 5, it will be 60017. Okay. Now please student tell me which package is better. Which package is better? Definitely existing package is 72422. It's very high taxes, and the revised package is only 60,017 pounds. So this package is better. Now take the difference of these two and write single line. So the difference is 12405. Difference is 1. There will be a net saving of 12405. Please, you can take the difference yourself. So the new package is better. The new, in terms of taxes, the new package is better. The new package is better. In terms of savings, the new package is better. Okay, still we have 2 very good questions, so lot of learnings to come. Just see the question. I hope you understood it, and it's my request, after this class, do revise the question once again. Always, if you, whenever you do technical things, do it 2 times. See this. Okay, my dear students. Second question is Keone. This is also a past paper. All these are past papers. They came in past. Now, this scenario relates to one requirement. You should assume that today's date is 15th of March 2025. Keone is the managing director of an 100% shareholding of Niko Limited. Okay, see, same case. Now, Niko Limited has no other employees, only Keone. So, for the year ended 5th April 2025, Niko Limited tax adjusted trading profit after, so only one employee, no other employees means no employment allowance. No employment allowance. Hope you remember there was an employment allowance I taught you of £5,000 for class 1 employer NIC. For class 1 employer NIC, for class 1 employer NIC, right? So it's not available in this question. Now, for the year ending 5th April 2025, Niko Limited's tax adjusted trading profit after taking account of directors' remuneration and employers, see, this time it is written after, see, after taking account. Last question it was written before, now it's after, that means already deducted. After taking account of directors' remuneration, one thing, and employers class 1 NIC, okay, is forecast to be 100,000, is forecast to be 100,000. Now, Niko Limited will pay Keone gross director remuneration of 47,500. This is the existing salary and this is the existing dividends, okay, for the tax year 24-25. Keone does not have any other income. Now, the good news is the first package is already calculated. When the company, the Keone company, when Niko Limited is paying 47,500 salary and 68,000 dividend, then these are the taxes. See, this is the income tax, this is the class 1 employee NIC for Keone, and for Niko Limited this is the class 1 employer NIC, and this is the corporation tax. So all four things are calculated for this first package. And just for your activeness, I'm telling you that this 100,000, see, it is written after taking, this 100,000 is after taking account of director remuneration and class 1 employer NIC. So this 100,000, from this 100,000 already the 47,500 salary, see, this is the salary, existing salary, already the existing salary, and this is class 1 employer NIC, this is already deducted. 5, see, this is 5299 and 47,500 is already deducted from this trading income PNL of the limited company, okay. In this 100,000 already these two things are deducted. From this 100,000 already these two things are deducted already, okay. And thank God they have given us all four taxes. Now they'll teach you planning. They'll give you a new package, they'll give you something new, and they'll ask for planning. Okay. So Keone is concerned that she has not been saving for her retirement, so she is therefore planning to make a gross pension contribution of 20,000 before 5th April 2025. Okay, so she needs to save something in the pension now during the tax year 2025. However, Keone is unsure whether the pension contribution should be made by Niko Limited or made personally by her. Now this is all planning. Okay, so there are two parts, 1 and 2. We are going to solve both of them separately. The first part, if the pension contribution is made by Niko Limited, that means employer, the company will make a pension contribution of 20,000 into company pension scheme on Keone's behalf. Now see, Keone is, this is employer, this is employee. You all know whenever employer contributes in the pension scheme of employee, it's an exempt benefit. It's an exempt benefit for employee. Okay, so when it is an exempt benefit, it's a benefit. First of all, it's a benefit to employee, but this benefit is exempt according to employment income rules. So when this benefit is exempt benefit, no more changes in employment income, and when there is no change in employment income, there will be no change in NICs. So that means in this first case, the NICs will remain same, the both NICs will remain same, right? And the income tax of employee will also remain same. Why? Because this benefit is exempt benefit. Exempt benefit means do nothing, don't do anything, so no more changes in the employment income. So in this first case, when there is no change, please active, when there is no change in employment income, when there is no change in employment income, when there is no change in employment income, so that's why no change in the income tax of the individual Kioni, no change in class 1 employee and employer and IC. But yes, only one thing will be changed, and that is corporation tax. This will be changed. How? Let me explain you. Because now whenever employer contributes in the pension scheme of employee, whenever employer contributes in the pension scheme of the employee, it is an allowed expense from trading income PNL of employer. It's an allowed expense from trading income PNL of employer or company. This time it's a company. Okay, so this 20,000 we'll deduct from this 100,000 profits, so the first option, just read the first option, okay? No need to read the second one, this is my job, I'll do it. Now read the requirement. For each of the two alternative ways, Kioni making pension contribution of 20,000. Now in the company pension scheme, or means the second part. I'm not teaching you right now the second part, okay? Calculate the revised figures of each of the four things and NIC figures already calculated. See, these are the four things. Number 1, income tax. Number 2, class 1 employee NIC. Number 3, class 1 employer NIC. And number 4, corporation tax. All these four things we have to calculate. All these four things we need to calculate. Okay, now see, this is the requirement number 1, very easy. It's all solved. Okay, just read it. As pension contribution paid by ER means employer. As pension contribution paid by employer, it's an exempt benefit. You know, whenever employer pays pension contribution for employee, it's an exempt benefit. So no extra income on Kioni, no more extra employment income on Kioni. That's why no extra income tax. So ITL remains same. So income tax liability remains same. See the screen. I already taught you this. I've already orally told you that when this benefit is exempt benefit, that means no change in employment income. And when there is no change in employment income, no change in income tax, and no change in any NIC. So also no change in class 1 and class 1 employee and employer NIC. But yes, whenever employer pays any contribution, any pension contribution for employee, it's an allowed expense. So the revised corporation tax liability will be 100,000 was the profit, 100,000 was the trading profit. Now you will deduct this 20,000 as an allowed expense. So you will have 80,000 final TTP. Now I request you to calculate corporation tax on 80,000 TTP yourself. You are not kids. And you know, on 80,000 first you will apply 25% and then you will calculate marginal relief. You know that you are not kids. But I'm solving it with the shortcut. What is the shortcut? With the bands, with the special bands I taught you in the class. Out of this 80,000, first 50,000 you'll apply 19%, and then on the excess 30,000 This is the shortcut. I hope you know this if you have taken the classes. Seven nine five zero. One 7450. Okay, so the first requirement is done. All four things. No change in the three things. No change in the three things. Only the corporation taxes change. We have written it. We have the option number 2 is definitely a little bit detailed. Option number 2 is little bit detailed. Now, the second option is if the pension contribution is made by Keone personally, Niko Limited will pay her additional director remuneration of 20,000 for the tax year 24-25, and Keone will then make a personal pension contribution of 20,000. Very simple, very simple, very simple. Now what will happen? Employer will give some extra salary to employee. First employer, the company will give extra salary of 20,000 to employee. So 20,000 will come to employee extra. Now employee will himself pay in personal pension PPC. Employee will pay herself in his or her personal pension account. Very simple. So now in this way, in this question, there is just an increase in salary of 20,000. There is just an increase in salary of 20,000. Now use your brain. Use your common sense. The existing salary was how much? Existing salary was 47,500. See the screen. Existing salary was 47,500. So now extra incremental 20,000 salary is to be given by the company. So extra, when this lady is receiving extra salary of 20,000, can you tell me what will be the new salary? The new salary is now 67,500. 67,500, but yes, the dividend will remain same. No change in the dividends. Okay, so let's solve one more part. Calculate all these four things. Let's calculate all these four things again with this new package. Okay, but do remember one thing. Now the salary will increase, but then this individual lady will do PPC, gross PPC of 20,000 gross PPC, okay, by the individual. Hope you remember the rules. Let's do it. Now, in the option number 2, your revised employment income will be 67,500 and dividend is 68,000, right? Okay, so you will have total income, total non-saving and total dividend income, you can see. Now, if you add these two, 67,500 and 68,000, this will be your total net income. And you remember the side working, you will take this to the side working. Okay, remember this. Now your total net income is 135,500. From this side working, we normally deduct two things. Number one, gross gift aid donations. And number 2 is gross PPC. In this question, there is no gift aid donation, so ignore it. But yes, there is a gross PPC of 20,000, so let's deduct it. This will be 115,500. Now, hope you remember, whenever your ANI, just the basic things I am telling you, whenever your ANI is more than 100,000 and less than 125,140, whenever your ANI is more than 100,000 and less than 125,140, you always do reduction working. Okay, you reduce your personal allowance. How you do it? Simply deduct ANI, simply deduct income limit, the 100,000 from this ANI, and check how much excess how much excess ANI you have over 100,000. So it will be 15,500. Excess is 15,500, and then you do divide by 2. Excess divide by 2. So this will be 7750. This excess is 7750. Okay, now you will reduce this excess from the normal personal allowance. Your normal personal allowance is 12570. Remember, hope you remember this working. This is all basics. So now your available personal allowance is 4820. Okay, hope you remember this topic, income tax computation. You did this in income tax. Normal personal allowance is 12570 and your reduction amount is 7750. So available AV means available personal allowance is 4820. You must know all these things. This we covered in the basic, very basic starting areas. So now you'll come to the main sheet and your available personal allowance is 4820. Now let's subtract it. So 62680 is your non-saving income and 68,000 is your dividend income. Okay, 68,000 is your dividend income. Now let's do one thing. Listen, in this question, individual, this lady made gross PPC. So we need to stretch the bands. But before we do stretching the band, first we need to calculate the relevant earnings. Remember, relevant earnings. So in this question, only one relevant earning is there, and that is employment income. See, this employment income is relevant earning. We all know that relevant earning is sum of three incomes: employment income, trading income, and income from furnished holiday letting. In this question right now, there is no trading income, no FHL income, only employment income. So now you will compare this 67,500 with gross PPC. So 67,500 and 20,000, the lower amount is 20. So this lower amount will be your TRC. TRC means tax relief contribution. And you all know that we stretch our bands with TRC. Okay, so let's stretch the band. See, I used to teach you like this, remember? So our normal band was 37,700. Our normal first band was 37,700 and we stretch it by 20,000. So 37,700 plus 20,000 is 57,700. 37,700 plus 20,000 is 57,700, right? And 125,140 plus 20,000 is 145,140. So these are your new capacities. Your new capacities of band is 57,700 and 87,440. 57,700 and 87,440. Right? Right? Now let's calculate tax. Very easy. Now be active, just be active. Your non-saving income is, final non-saving income is 62,680. You'll pick your non-saving income and you'll knock the first band. So the capacity of first band is 57,700. So we'll consume complete first band. So it will be 57,700. It will be 57,700 into 20%. 57,700 into 20% is 11540. Now this first band is totally finished. Now the end, this first band is end. Okay, now out of 62680, you have calculated tax on 57,700. How much is left? It is left with 4980. Yes, 4980 is left, and definitely as the first band is completely exhausted, so it will come in the second band, and the second band tax rate for non-saving is 40%, so it will be 1992. Okay, right? So non-saving is done. Out of this 87440 we have used 4980 band, but still a lot of capacity is left. Still a lot of capacity is left in the second band. Now let's come to the dividend income. The most easiest income. So in dividend income, just two steps. First NRB. NRB is fixed 500 multiplied by 0%, and then normal tax. How much is less? 67,500. Definitely this 67,500 will go in the second band because the first band is totally finished. So we'll write here, and the tax rate of second band is 33.75%. Now kindly add all these for tax. It will be 36313. 36313 is your income tax liability ITL. This is your income tax liability. Yes, a little bit detailed, but not an abnormal job. You can do it. Please be alert and see the question. Okay, now please alert. We were required to calculate four things. Number one, income tax we have done. Now class 1 employee and employer NIC. Please see the screen. Class 1 employee NIC is calculated on cash, salary, bonus and driving payments over 45 pence. No bonus in this question. No driving payments, only salary, and the salary now is 67,500. See this. This is your salary. Let's do it. 67,500, and you guys are no more kids. You have already done NICs, so you'll pick 67,500. And you'll knock the first band. So 12570. It's 0%, so it will be 0. Okay. Now, as your salary is more than 5C. As your salary is more than 50270, that means your complete second band will be consumed. Your complete second band of NIC will be consumed. Okay, so how to write the second band? It will be 50270 minus 12570, and the tax rate is 8% now. 8% for second band, so it will be 3016. Now finally we have calculated NIC till 50270. Now the last layer. So your salary was 67,500 minus you have calculated NIC till 50270. So the last layer will be only 2%, will be taxable on 2%. $344.6. So finally your class 1 employee NIC will be 3360.6. Okay, so now we are going to calculate class 1 employer NIC. Class 1 employer NIC is also calculated on the same amount, same salary, 67,500. And the good news is that class 1 employer NIC is calculated very straightforward. 0 to 9100 it's nil, and 9100 and above it's 13.8%. Okay, so 67,500 minus 9100 into 13.8% will give you total class 1 employer NIC. Total class 1 employer NIC, which is 8059.2. Okay, now the only technical thing of this question I'm going to teach you, I would say only technical thing, and now you don't need to sleep, be active. We have to calculate four things. Income tax, yes, we have done income tax. See, this new income tax we have calculated. Class 1 employee NIC we have calculated. Class 1 employer NIC we have calculated. All three things we have calculated and we got the marks. Yes, we got the marks. All these three things we have calculated and we got the marks. Now the final thing we have to calculate, corporation tax. revised corporation tax, revised corporation tax, and for that we need to use the brain. We need to use the brain. Listen to me. See, in this question, see this line. It was written that this 100,000 is after. See this, the word. See the word after. The word is after. This word is after taking account of director remuneration and class 1 employer NIC. That means whoever is calculated this 100,000, whoever has calculated this 100,000, they have already deduct the existing salary. Existing salary of 47,500 is already deducted from this, and existing class 1 employer NIC, this is also deducted from this. These two things, 47,500 existing salary, 47,500 existing salary, and existing class 1 employer NIC 5299 already deducted from this 100,000. Now if we start from this 100,000, so now we just need to deduct the additional things. See, the existing salary and existing class 1 employer NIC has already been deducted from this 100,000. So now no need to deduct complete things, otherwise it will be double counted. So now you just need to deduct extra things, extra salary, additional salary, and additional class 1 employer NIC. Now can anybody tell me how much will be the additional salary? Additional salary is only 20,000, because the old salary was 47,500, the revised salary is 67,500. So additional salary is 20,000, additional salary is 20,000. And now I'm going to tell you the additional class 1 employer NIC. Please see the screen. This was the existing class 1 employer NIC. See this. And this is the new class 1, total new class 1 employer NIC. So the new is 8059.2 and the existing was 5299. So can anybody tell me what is the additional? Additional will be 2760. Additional class 1 employer NIC will be 2760. Can you see? Additional class 1 employer NIC will be 2760. Now let's calculate the revised corporation tax. Revised corporation tax. Listen, already given TTP is 100,000, and from this 100,000, existing salary and existing class 1 employer NIC has already been deducted. So additional salary to deduct is 20,000, and additional class 1 employer NIC will be 2760. Now what will be the final answer? Revised TTP will be 77240. Now my respected student, again I will give you a small job. Calculate corporation tax. Calculate corporation tax. Calculate corporation tax. Okay, you can do with the long method, I'll do the shortcut. What is the shortcut? Out of this 7740, first 50,000 is 19%. The additional 27240, it's going to be 26.5%. Okay, now you do it and to calculate the tax. I'm writing the answer. It's going to be 16719. 16719. Yes, that's the end of this question. That's the end of this question finally. That's the end of this question. We have calculated all the four. Okay, corporation tax we have done, class 1 employer NIC, class 1 employee NIC, and income tax liability. All 4 things done with the option number 2 as well. All 4 things done with the option number 2 as well. Okay. Now one last question is left. One last question is left, and that is Sophia Wong. Again, this is the past paper. Again, this is the past paper. If you want to see the last is the previous question. This was the previous question. Okay. Let's move to the last question. Okay, without wasting any time. Sophia Wong. Sophia Wong. You should assume that today's date is 15th of March 2025. This scenario relates to two requirements. Sophia Wong has been self-employed as a lawyer for many years. For the year ended 5th April 2025, for the year ended 5th of April 2025, Sophia has forecast, please listen, has forecast that the tax adjusted trading profit will be 80,000. Now, she was working as a single individual human being, self-employed sole trader. So whenever you work as a sole trader, human being, your income will be trading income, and on that trading income you need to pay two things. Number one, income tax, and number two, class 4 NIC. You know that. Okay, so this will be her only income for the tax year 24-25, and Sophia's total income tax liability and the national insurance contribution for this year, if she continues to trade on self-employed, is as follows. So that means, just think, if she works as a sole trader, these will be the two taxes. Income tax is 19432 and class 4 NIC is 3988. If you add these two, the total will be 23420. So the existing package as a sole trader is already given. Existing package as a sole trader is already given. Existing package as a sole trader is already given. Existing package as a sole trader is already given. Okay. Now they are telling you one new package. See, Sophia understands that she could save tax and NIC if she instead traded as a limited company. And she is therefore considering incorporating her business on 6th April 2024, right? So now she'll make a limited company as taught you in this class beginning. The forecast taxable total profits of the new limited company for the year ended 5th April 2025 are unchanged at 80,000 before taking account of any director remuneration. Now, assuming that Sophia Wongs incorporate her business on 6th April 2024, advise her whether or not there will be an overall tax saving of tax and NICs for the tax year 24-25 if she withdraws. Now there are two cases. If she withdraws all the profits, this is very important, all the profits from the new company as director remuneration after allowing of employer NIC and gross director remuneration of 71402. Wait, this is the first case. In the first case, she will become employee, so the company will become employer, and out of this 80,000 profit, she will withdraw as a salary 71402. And you know that salary is an allowed expense. But now use your brain. Please use your brain. Whenever company becomes employer, so company has to bear the burden of class 1 employer NIC, and that class 1 employer NIC is also allowed expense. So company finally wants a TTP of 0 because they want to withdraw complete profit. Now use your brain. Your trading profit is 80,000 and you want final TTP to be 0, and you have deducted salary of 71402. So can you tell me what will be the balancing figure? What will be the balancing figure of class 1 employer NIC? Can you calculate? It will be 8 it will be 8598 will be the class 1 employer NIC balancing figure. Now as a student you may ask, sir, how can we trust you? How can we trust you that this 8598 is a correct number? This 8598 is the correct number. Let me give you evidence. Let me give you evidence. Listen. Just have a look. You tell me your salary. Your salary is 71402. Your salary is 71402. Now let's calculate class 1 employer NIC. Salary less, remember 9100. The band of class 1 employer NIC is 9100. So 71402 less 9100 into 13.8%. Please do it. It will be 8598. Okay. So it's the same amount. It's the same amount as it is written through the balancing number. Okay. And also I have calculated class 1 employer NIC for you. Now let's start with the first package. I'm doing this package right now. This package right now. Okay. I'm doing this package right now. Okay. Now in this first case, when this lady is receiving a salary of 71402, definitely this salary is employment income. Now simply start calculating taxes. So 71402 is your employment income, and as there is no other income is given, so this will be total income, and this will be your ANI. And whenever your ANI is less than 100,000, you will have a personal allowance of 12570. So what will be the final taxable income? It will be 58832. Okay. Now simply calculate tax. Simply, very easy. You will pick this 58832 and you'll knock the first band. So the first band is 37,700 and you'll multiply it by 20%. So this will be 7540. Okay. Now out of this 5832, 37,700 tax we have calculated. So please subtract 3700 from 58832. The remaining amount will be 21132, and yes, it will go in the second band, which is 40%. So it will be 8543. See, this is your final income tax liability. Your final income tax liability for the first case. Okay. Very easy, honestly. Now, class 1 employee NIC. Your salary is 71402. Hope you remember the rates of class 1. Please be strong. Class 1 employee NIC. The first band is 12570. So 12570 multiplied by 0% is 0. And as in this question, your salary is 71402, which is more than the second band. So complete second band of class 1 employee NIC will be consumed. So how to calculate the second band? 50270 minus 12570 into 8%. You know the rates. So it will be okay. And finally the last layer, 71402 is your salary less the second band 50270 into 2%. Remember 2% rate of the last band. I'm sure I expect that you know how to calculate class 1 employee NIC. Now you guys are no more kids. Please remove your pamper. You are big boys now. Now class 1 employer NIC, already I have taught you already. See I have calculated here 8598. I have calculated 2 times 8598. I have already calculated 8598. Okay. Now in this question there will be no corporation tax liability because the final TTP was 0. See, your final TTP after these two allowed expense will be 0. So in this case there is no corporation tax liability. In this case there will be no corporation tax liability. Okay. Now let's finally sum up all the taxes. This is the first tax, ITL, income tax. Then this is the second class 1 employee NIC, and this is class 1 employer NIC. Definitely company is also yours company, but no corporation tax. So these three things only. These three things only. Okay. So it will be 159033438.6 and then 8598, and this is 0, no corporation tax. So how much is the total? 27939.6. Now use your brain. In the case number 1, your total taxes are 27939, 27,939, which is more than the existing one, the existing package. So this planning is not beneficial as compared to original setup. This planning is not beneficial as compared to the original setup. This planning is not beneficial as compared to original setup, right? Now one last part, one very small baby part, and then the class is end. See the workings if you want to. Please. Number 2, dividends after allowing for corporation tax will be 62550. Now the second point is, this is the company and she is the 100% shareholder. Sophia. So now Sophia will withdraw dividends, but don't forget, whenever you guys have done accounting, whenever you withdraw dividends, you always withdraw profit after tax, not before tax. You always withdraw profit after tax. After tax means after corporation tax. Right? So just go very simple. Your trading profit or your TTP was 80,000. First calculate corporation tax. You go with the long method, which I have already explained you. I'll go with the shortcut. So 80,000 means first 50,000 will be 19%, and then excess 30,000 will be 26.5%. So your corporation tax will be 17450. Okay. So from 80,000 you will deduct 17450. Now how much will be the profit after tax? Will be 62550. Your profit after tax will be 62550, and this profit after tax will be distributed as a dividend. Use your brain. So now this dividend is an income, 62550. Okay, now let's calculate tax. No other income is there, so 62550 will be your total income. This will be your ANI, and whenever your ANI adjusted net income is less than 100,000, your personal allowance is 12570. So this will be 49980. 49980 is your taxable income, and this is pure dividend income. Okay, let's calculate tax on it. So first of all, always dividend income NRB is 500. So 500 multiplied by 0% is 0. Out of this 37,700 we have calculated tax on 500. So 37,200 remaining is left. Now 49980 less 500 is how much? 49480. Okay, now you will pick this remaining income and you'll knock the first band. So the remaining capacity of first band is 37,200, and it will be fully consumed. We'll consume it completely. So 37,200 into 8.75%. I am sure you know the first band rate of dividends. Okay, now finally, out of 49480, listen to me, 49480 we have calculated further tax on 37,200. So what will be the excess amount? 12280 is left. 12280 is left, and this 12280 will definitely go in the second band, and the second band tax rate is 33.75% for dividends. So it will be 4144 Now, can anybody tell me the final tax will be 7399.5. 7399.5. Final tax is 7399.5. Okay, so in this dividend part, there is no NICs. With dividends, there is no class 1 employee NIC or employer NIC. See the screen. So can anybody tell me what will be the total cost? Yes, in this packet there is a corporation tax. See this, there is a corporation tax of 17450, and then there is an income tax. See, let me highlight it. Wait, this is the one cost and this is the second cost. Only two cost, 7399.5, but there is no NIC. So if you add these two, it will be 24849.5. 24849.5. Okay, although this is cheaper than the first option, this option is better than the first option. In the first option, please check it out, the total amount was 27939. See, the total amount was 27939.6, but now here it is 24849.5. So yes, the package 2 is better than package 1, but still it is not better than original package of in the given the question. Original amount was how much? Let me tell you, 23420. Original was 23420. Okay, so the cheapest option out of all these three is the original option, which she was following. The original package was best. You can see. Okay, now see this line. Although read this English. Although package 2 of dividend withdrawal is better than package 1 of salary withdrawal, but still it's beneficial for Sophia to be a sole trader. The original package was best. The original package given in the question was the best. You can see in the original package the cost was, see this is the cost, 23420. So this one is the cheapest cost. This one is the cheap. So original package was best. We would advise that don't go for limited company. We would advise her don't go for limited company. Okay, just have a look with the question. If you want to see the question again, if you want to take the picture of the question. Okay, now finally, don't shut down the class, please. You need to read one article. Examiner has written one excellent article on it. It is available on accaglobal.com. You need to write technical articles TX, and the name of this article is advanced skills or higher skills. Advanced skills or higher skills, and you will find different cases. Small work as a sole trader, work as a company, everything is in detail. Must read minimum 3 to 4 times. You have to read. Okay, then this is the new kit you have. Kaplan kit is available now. I don't know I've told you this before or not, that in the exam kit beginning, in the exam kit beginning, you will find one area. See this area, time limits and election dates. Very important area. It's free marks. Free marks. Read this at least 10 times. This page, the next page, and this next page. These four pages. In this you will find all the penalties, due dates, election dates. At least 10 times you need to read. You need to learn these pages. Simple as that. You need to learn these pages. You need to learn these pages. Okay, you need to, I'm again saying it, you need to learn these pages. Very useful. It will give you cash marks. It will give you cash marks plus a very good revision. Very good revision, please. Now let me give you some assignments. Yes, do this question. This is also a planning question. Kazoo is a planning question. Do it. Okay, it's a planning past paper. Try it. Okay, because now you have done the planning class. Then this question also, Kagan is also planning question. Do it. Yes, do this question, cat. This is also planning question. Yes, this Bertie is also a planning question. Please do it. Yes, this question, fluid is also a planning question. Please try it now. You can try now. Paul is also one of the planning question. Paul. Okay. Okay, that's the end of today's class. I hope you liked it. Please work hard and make your teachers proud. Don't waste a single day now.